my previous video, we predicted that Bitcoin is going to hit $130,000 per coin. Sequel to that, Bitcoin rallied to $126,000 per coin and fell to the downside. Now, the reason for this fall was anticipated on this channel. The last time I came here as well, I still made a prediction based on technical analysis that Bitcoin has gotten to a level I call the 100% retracement. Now, this level is very, very critical for traders who want to continue to trade. That anytime price gets to the 100% retracement, most likely we should wait for a breakout above this level. Now, if you don't wait for a breakout, that means you are not a pro trader. Only pro traders know this level and know how to act around them. Now, I brought it known to everyone watching this channel and to you watching it for the first time that the 100% retracement is a level you should be careful with as a trader. If you are trading a trending market, always wait for the breakout above the 100% retracement to be able to take more trades to the upside if it's a bullish trend, or to the downside if it's a bearish trend. How do you get to the 100% retracement? The 100% retracement is a level created by a counter trend line play. So once you have your counter trend line break and you get into a trade, your first take profit should be at that point, the topmost point of your trend line. So that's the 100% retracement. It's a critical level because give or take, it's going to form what I call a double top, and a double top is a chart pattern. If you see a chart pattern, you should be conscious of it. You should know that chart patterns are ranges, and in order to trade ranges, you should use range breakout strategies. So in this case, always wait for the 100% retracement to be taken out before you continue to take your trades. Simple, clear price action at its core. I made that prediction right here that the 100% retracement needs to be taken off for Bitcoin to get to our eventual $130,000 per coin. But Bitcoin got to that level and fell to the downside. So this ruckus online about what Trump came and said and how Bitcoin fell subsequently to that, it's all been planned. It's all been seen on the charts. So most of what we see on the charts, most of what we see as an economic sensation is grossly printed on the charts as human behavior. So we see these things on the chart, we know how to do it. And in this video, I will show you how to be able to trade the foreign exchange market, knowing subtle signs which the market gives out to traders who have placed themselves in a position to be able to see these subtle signs and trade it accurately. There's nothing hidden about it. It's all pure price action. Most traders hear about price action, but they don't know how to trade it the right way. So in this video, I'm going to show you how to trade price action the right way. And if you're new to this channel, subscribe. Now let's get into the video. The first pair on our watch list is Euro USD. Now, what do I think about Euro USD and what Euro USD intends to do? Now, this is the weekly time frame for EURUSD, and we can see clearly as savvy traders, we can see that EURUSD is making what seems to be like a double top on the weekly time frame. Now, you know what double tops are. Double tops are chart patterns. They're actually bearish reversal chart patterns. And when they form on higher time frames like the weekly and the monthly time frame, you should be very cautious about them, because once they actually break out of their neckline, believe it that trend is going to continue to the direction of the chart pattern. So in this case, if we break below this neckline, which you can see here, best believe that Euro USD is going to fall downwards, just like our simulation tool says it right about here. So that was the last prediction I made about Euro USD, and let's go over to the daily time frame to see if that happened. Now you look here closely, you can see how many, to show you that this matters a lot, you can see how many daily candles are reacting about it. So this is the first break, the market pulled back up. Then this is the next day, the market pulled back down. The market is now pulling back up currently. That's to show that this is a very strong zone and there is a lot of activity between buyers and sellers around this zone. They are tussling to see which one is actually going to win this fight. And in my opinion, because from the higher time frame, this is a double top, if we eventually did sustain below this zone and not having to deal with all these reactions here, then I would have been looking to place more trades to the downside. Don't get it twisted, guys. The overall trend for Euro USD is bullish. However, we are meeting this chart pattern that is trying to undermine the continuity of the bullish trend, and I will only trade what the market shows me. I'm not a trader that trades blindly. Whatever clues the market is giving me, I pick them up as an investigative trader to know exactly what the market is trying to say or communicate to me. In this case, we can see that a chart pattern is about materializing. However, we're having issues with the neckline. If this market eventually sustains below this neckline, which I see here, I'll be taking more trades, which is bearish trades. I'll be taking more short trades to the downside, and my first target will be here, which is this line I put about here. Why? Because this was the last structural point, and I need to ensure that this is going to be the first place which I'll take my profit, and the overall target will be here. So let's see how we'll line up if this eventually happens. So I'll eventually want to take a trade like this. I'll do that in the 4 hours actually. So this is how I usually line up for these trades. My very low stop loss all the way down, like so. And that's over 1:5 or almost 1:6. But my first take profit will be here, which is still going to be a good sizable risk to reward, and then my eventual take profit will be here. That's how I love to trade. But the setup is not yet come, and I'm not yet ready to trade Euro USD until my criteria for entry has been fulfilled. Now we should also look at the flip side, because the flip side is where the prevailing trend for Euro USD actually is. So because of we're having issues with this neckline, we should also be cautious that until this neckline breaks, we are going to continually be bullish on Euro USD. So in that case, if Euro USD continues to stay above this zone, I will come back here and give you guys a fresh update on the continuity of this trend. Ideally, I would have wanted this market to blow past this region right about here, the monthly zone, but you can see it didn't do that. It came to this region and formed a double top. So I'm going to have to respect it until we break above this region to be able to continue to trade Euro USD to the upside. Now that's my take on Euro USD. Let's go over to the next pair. Now the next pair on our watch list is GBP USD. Now GBP USD is doing about the same thing. However, GBP USD did not show us anything like a chart pattern on the weekly time frame or the monthly time frame per se. So we are having the prevailing trend for GBP USD being bullish. So I want to continue to trade GBP USD to the upside, but you can see clearly that's not happening, because let alone on the weekly time frame, I came on here the previous videos to analyze what happened on the monthly time frame. On the monthly time frame, we met this massive bearish rejection candle to the downside, and I was quick to tell everyone here that you should be careful of this candle, that this candle might be the early clue to a reversal, but we should be mindful of it. And it came to happen right about this point, because this was an iconic zone which I mentioned the last time, that this is the neckline of a previous head and shoulder that formed on GBP USD. If you want to see how I made this analysis, just go and watch my previous videos. You will see how I made the analysis. Now, GBP USD, I'll just quickly go over to the daily time frame to see what GBP USD is doing. Now, I had plans to take GBP USD to the upside if we did sustain above this level, but GBP USD didn't do that, and rather has tanked to the downside. So this simulation too, I'm just going to have to remove it temporarily to show you guys what my take on GBP USD will be. And I remember clearly what I said, that once we break below this yellow bar right about here and sustain below it, I will come back for a review for GBP USD. Why? Because this bar, let me just show you something, guys. We have been, so this is actually on the daily time frame, we have been trading to the upside like this. So we have been trading to the upside like this. We broke structure right about here, but the market has come to trade above it and has been playing around this region. Now we have come to structure again, and we are now breaking below structure. So this entire area is significant. If we do sustain below this area and continue pointing downwards, I might be coming to take more shots for GBP USD to the downside. But that's not the prevailing trend. The prevailing trend is bullish. However, for me to continue my initial thoughts on having more bullish trades to the upside for GBP USD, GBP USD needs to come out of this quagmire of range, because what's happening in this entire area, guys, is that GBP USD just entered into a big nasty range, and that's what traders that don't see this market from the high time frame perspective miss out. And once you miss out on simple identification of ranges on the high time frames like this, you are going to have your trades messed up on the lower time frames once you are trading on the 1 hours, the 30 minutes, the 15 minutes, some of them even trade on the 1 minute. So once you identify this as a range on the high time frame, you know that you shouldn't even be forcing trades on the lower time frames. I know that I can tell very well that if anyone had cared to want to trade GBPUSD, you would have failed on all of your trades. You would have missed out on all of your juicy trades. You have most of your trades stopped out because GBPUSD just isn't giving at this area. Why? Because we're in a range and we need to break out on either side. So we need to break out on either this side to the upside, or we need to break below this zone. As simple as that. Once we have a clear direction as to where GBPUSD wants to go, we follow it. So in this case now, we have seen that we have broken actually below that zone. That's why I'm having interest for more sales for GBPUSD. It's the downside. But because this trade is in conflict with the overall time frame bias, I'll be reducing my risk, because let alone we have not seen any chart pattern here to start with. So if I thought I want to take any trade on GBPUSD, I will reduce my risk. Standard, if I risk 3% in this kind of trade, I'm going to reduce it to 1%. Standard, if I risk 1% in this trade, I'm going to reduce it to 0.5%, just like that. So that means trading cautiously, because you understand that you are not trading in the overall time frame direction and you have not seen any chart pattern that will want to change the trend. So this is how to trade cautiously and professionally. Now, that's my take for GBPUSD. Now, if GBPUSD actually continues to go to the downside, I will be thinking of taking some profits here. Actually, we're going to have a massive tanking to the downside if that happens. Let's see how many pips we're going to likely catch if GBPUSD wants to fall to that level. That's 649, about 650 pips to catch on GBPUSD if the downside trade setup ensues or emerges. And it's going to be quite a juicy trade, but until that, we'll see what the market wants to do. So that's what my take for GBPUSD. The next trade I'll be looking at now is BTC. Now, let's see what's going to happen on BTC. Hey there, I know you're enjoying the video that you're just watching about the technical analysis I'm giving about the Forex market. Sorry to cut you short on that, but I want you to be able to trade like this. I know many of you traders are struggling with your trades and you want to be able to level up your trading to probably be able to see the market for what it truly is, to cut out the confusion and trade this market for what it truly is by using pure price action. So I've actually recorded a free masterclass on how to trade this market like a pro without indicators, the way I do see the market. You can see the way I dissect the market. You can be able to dissect the market in minutes. By the time you have watched this video, you'll be able to trade like this. So I've actually made this free. It's not paid for, and you can actually go and level up your trading right now. At the end of this video, there's a description to the link to this masterclass. Be sure to go and click on it and hop in and trade like a pro. And let's go back to the video. And the intro of this video, I told you exactly what I meant by the 100% retracement. BTC got to the 100% retracement right about here and has tanked to the downside as anticipated. Now, what does this mean for us as traders? Now, you should still know that we have entered into a very precarious situation for Bitcoin. So when I say precarious, you should understand what I mean. This is basic price action 101. We have simply gotten into what I call a range. We have gotten into a range for BTC. And if you don't know how to trade ranges, do not touch BTC. I'm not kidding. I'm not kidding, guys. If you don't know how to trade ranges, so this is this is posted upper border of the range, and then this is the lower border of the range as well. So because we broke out from this region, this is the range I'm talking about. Now, how do you identify ranges, guys? A range is simply, so I'll just use this. So the market can either be making higher highs and higher lows. In this case, you can say that we are in an uptrend like so. So this is an uptrend with high highs and high lows. Now the reverse is the case. The market can be making lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. So in this case, you say that the market is what? In a downtrend. As simple as that. Now, if the market is not making either of these two, definitely we can just be moving sideways. So the market can actually be moving sideways, making high, making equal low, making an higher high still the same, or making an equal high equal low. So the market is just moving sideways and consolidating. So classically, you know that we are not making any further move to the downside or to the upside. So in this case, we'll mark this out as the tops and then mark this out as the bottoms. Now this is a consolidating or ranging market. Now check whether BTC is making higher highs or higher lows in this case. So you see why. So this is a higher high, this is a higher low, higher than this one. This is an equal high, this is a lower low, this is a lower high, this is a higher low. Now this is an equal high, this is a lower low. This is a higher low rather. So you can see that BTC just moving sideways. So that's why I say it's a ranging market. I was quick to spot this because I know how to trade this market, and professionals too will tell you that you should avoid BTC. If you are having your eyes on BTC as an investment, hold on until we do either of these two things. So I'm just going to take out this for now. Just give me a second. So what I think for BTC now is we are going to have to come and break above this level, in which case we're looking for a range breakout strategy to be able to trade this to the upside, and BTC will eventually get to our intended target of $130,000 per coin, as I had predicted earlier on. Actually BTC is going to rally to $154,000 per coin. That's my new take on BTC, and if that happens, we'll have a lot of coins to make. We have a lot of money to make on BTC as well. Now we actually need to wait for this breakout to happen above the 100% retracement, or we need this BTC. We need BTC actually to avoid this entire area and still come back down and break this zone. But I will not be looking for a down trade for BTC because we are only going to be meeting the monthly trend line, and it's a long shot trading to the downside. The only way I'll be wanting to trade BTC to the downside actually, guys, is if we break this overall trend line. So this overall trend line, you can see it clearly on the weekly time frame. So it shows that BTC has been actually is the monthly time frame. So that's actually the monthly trend line. Impressive. So if we break that trend line, then you know for sure that BTC is going to tank to the downside massively. So that's my take on BTC. The next one I'll be looking at, the next pair I'll be looking at is oil. Now, I did predict that oil is going to tank to $55 per coin from $65 per coin where it was previously. Now, currently, oil is trading at $58 per coin. We're going to eventually get to our $55 per coin mark because we know where this market is going to. This is also a scenario of the same issue I had with oil. I was quick to come and point it out here that oil is still having to respect this level, which you see right about here. So oil was respecting this level and the price came and reacted right about here several times. And I said, I'm only going to take trades for oil to the downside if we break below this level. Now, what does this level signify? The exact same thing I've been talking about right from the beginning of this video, which is the 100% retracement. If you can be able to spot as a trader when the market has gotten to the 100% retracement, then you know how to position your future trades in the direction of the monthly bias, so in the direction of the trend. In this case, oil has had a bearish bias for a while now, and I've been shorting oil. I was waiting for the next shorting trade, which happened right about here. Now oil is already tanking below. I was able to take my trade on the 4-hour time frame. Now, if oil continues to tank to the downside, my first level target for oil will be here, and this is why I say it's going to be my first level target, because we have a zone right about here. So we'll take some profits here, and then my overall once we get to this level, guys, we're going to have to wait until we break below it to continue to take more trades to the downside. So my overall target for oil is right back down here at $43 per barrel, and that's going to be so much of a loss for oil. A lot of businesses rely on oil, the economy relies on oil and all that, but we are forex traders. What do? If we are seeing that the markets are not going in a particular direction, no matter the commodity, We have the skill to be able to trade it because we know what the market is about doing. Simple. Now that's my take for oil. I'm actually shorting oil and I'll be waiting for more trading opportunities. So the market actually gives us trading opportunities by having pullbacks. So we take advantage of those pullbacks and trade in the direction of the trend. The next pair we're going to be looking at is GBP/JPY. Now GBP/JPY is doing something impressive. I'm actually waiting for a trading opportunity on GBP/JPY. Now GBP/JPY broke above this zone right about here and has come back to start wanting to come and retest it. If we can go over to the forward time frame, you can see that we are having the pullback setting up nicely. So we can see that my counter trend has been drawn, and this level right about here is actually going to be what I call the 50% Fibonacci area. So I'm waiting for the market to come around this area and react nicely. So the market can pull back to either the 50% retracement, which is this level that I drew right about here, and the market can actually pull back here and then give us a setup, or come back all the way down here. In this case, this is support. So this is support on, this is support. You can see rates is right about here. So if the market comes down back here at this support and breaks off and actually breaks a counter trend line, we'll still get into this trade. The reason is because I told you that the pullback can be to, I made a previous video about pullbacks, and I told you that pullbacks can happen at 3 different levels. It can happen at a renowned support or resistance area. So maybe after a break of this level, the market usually comes back to retest that level before it continues to the upside, or before it continues to the downside, as the case may be. Now the market can also pull back to a trend line area. So in this case, it can be the horizontal level at the touches of the trend line. So whenever the market pulls back to those areas, you should be mindful that there is actually a level right there, and the market can bounce off those levels and move back to the upside or to the downside. Or the last level the market most times might want to pull back to is the 50% Fibonacci. So in this case now, we're having 2 of those scenarios play out. So this is the 50% level, and this is the support level that it broke off below. Now, it can be any of these 2 levels actually, but if it does pull back to this level, then we will have more massive move and more pips to catch. If it decides to take off at this level, we are still positioned to catch this trade. This is how to position guys as traders to be able to get a lot of wins from this market. So imagine the market actually pulls back here and gives us a setup. We're having our first take profit at a risk reward of 1:2.79, and then overall will be this line right about there. So that's going to give us a risk reward of 1:5. But if it does pull back to this zone, then you know that we'll have a far better risk reward than this. So this is how I'm looking at for GBP/JPY, and it's also going to be one of my favorite setups to take in this month, and I'm waiting to take this trade. Now, on a side note, I have a Telegram channel, and that's where I go to paste a lot of my trading insights, and sometimes I do paste signals on this group. So I have begun to think about pasting signals on this group, and if you want to be a part of these signals as I drop them, just join the Telegram group. It's free. Enjoy. Now let's go back to the charts. That's my take on GBP/JPY, and the next pair we'll be analyzing is GBP/NZD. Well, there's nothing really much to talk about GBP/NZD. We had already made this prediction that GBP/NZD is going to get to this point. If you can watch my previous video, I marked, actually, my previous video, I marked this level as the next target for GBP/JPY, and we did eventually hit it. So you can see that we have hit that level, which is the level in green right about there. So all I'll be waiting for to continue to trade GBP/JPY to the upside. So because my bias for GBP/JPY is actually bullish, so you can see that we have been bullish in GBP/JPY, now making higher highs and higher lows, higher highs. Now we have come to make an equal high right about here, because this was the last high that was made. The market has come to meet this high. So all I'll do, because we're the daily time frame, all that I'll do is simply I'll just clone this and then put a level right about here and tell myself this has now become 100% retracement. If GBPJPY breaks above this level, I'll be willing to take more trades to the upside. As simple as that. Trading doesn't need to be hard. It's once you know what the market is doing and position yourself, you'll be able to ride the market. In this case, you'll be able to ride the trend. Now, if it fails to break above this level, fine. Then we know that it wants to rest. It wants to breathe because the market doesn't move in a straight line. If you look at this market right from the weekly time frame, okay, actually, let's look at it in the monthly. You can see that it's been kind of linear, quite linear. So we are having a lot of green candles, a lot of it, without concomitant pullback. So we need the markets to be able to pull back on the high time frames and then continue its trend in the overall direction. So those pullbacks are highly anticipated. That's why I feel this market is very linear, and best believe that this 100% retracement might actually hold. We'll see. So if the best 100% retracement holds, that means we are going to be expecting pullbacks for GBP/JPY to the downside. Now, the extent of the pullbacks, again, is going to be to any of these levels. It's going to be to the previous support area. So in this case now, it can be that the pullback might be to this level right about here. So this was the previous support. So this was the previous support. So the market might likely pull back here and then react around it and take off. So this is how the market might likely want to come and behave, to pull back here, retest it, and then go back to the upside and maybe eventually break this zone and continue to the upside like so. Or so I'll just take this away. Or it can be to a Fibonacci area. So in this case, the market might pull back to somewhere around here. So in this case, you're going to see it clearly on the 4-hour chart. So I'm just going to take this out now. So if the market is pulling back, we are looking for swing low to swing high. So the market might want to come and pull back around here. But frankly speaking, I'll be waiting for the market to do something very remarkable. I need the market to be able to break this zone for me to be able to take more trades. Simple. I don't care where the pullback is going to be. I want clear direction. Anywhere is pulling back here, unless it pulls back to this place, then I'll be interested. But if it doesn't pull back to this place and pull back somewhere midway, I'm not going to be interested. But if it pulls back here and holds, because this was a previous supply region that got broken. Now it got broken and the market retested it below and decided to sustain above it, move to the upside. So if the market comes here and holds at this level and gives us a setup, then we will trade continuously to the upside. The last time I came here, I did point out something that was happening to USD CHF on the weekly time frame. Now on the weekly time frame, you can see that USD CHF is making a chart pattern, actually a double bottom. Now a double bottom is a bullish reversal chart pattern and it has a neckline. The neckline has been clearly drawn here, which is what you see here. So I did spell it out right here that these levels, like in this case, the neckline is giving us clarity. Basic laws of price action says once a chart pattern forms and the neckline is broken, the trade will continue in the direction of the chart pattern. So in this case, this is a bullish reversal chart pattern. And if we do sustain above this neckline, once the market breaks above it, then I'll be taking USD CHF to the upside. So all these right, USD CHF have been bearish, but because of this chart pattern, we might be seeing, if the neckline holds, we might be seeing a medium-term bullish trend for USD CHF. So that's it. Now on it, a little note. This is a tip, and this is an insight I'm giving you about the market. You see USD CHF and GBP USD, they are contrasting pairs. So Euro USD, GBP USD are contrasting their movements to USD CHF. So if USD CHF is moving to the upside, these other pairs are going to tank to the downside. Hence the earlier prediction I made about GBP USD and Euro USD. So if this chart pattern holds for USD CHF and we're trading USD CHF to the upside, best believe that Euro USD and GBP USD might just want to tank to the downside. I've not looked at DXY, but DXY is another pair that can tell you exactly that as well. So that's my take on USD CHF. I'll be waiting for the neckline to be broken, and then I'll be able to take trades to the upside for USD CHF. Simple as that. And the other pairs are not juicy, and that's just my time here on the analysis of this pairs. So this is how I do come to break the chart down to show you guys exactly how to trade this market the right way. If you loved the value from this, please make sure you do subscribe to the channel. If you want to read market structure like a real professional, I made a video about reading market structure so that you can be able to see what I see when I say that the market has broken a particular level and the trend is about to continue. All these are talked about in structure, and I did a very good job in that when it comes to structure in this video right about here. Go and watch it.